People have that?
Yep,
Yes, we can
good.
see that.
Terrific. It's working. Okay, so banks from the outset have seen that they play a very important and particular role in the economy, that this was going to be not only a health crisis, but an economic crisis that would have, potentially deep and devastating impacts on people's financial well-being, and that banks had a role that they had to play, and they had to really step up. I did want to start by saying that banks have come into this crisis better placed than I think they've ever been in the last decade since the global financial crisis. Regulators globally and here in Australia, and governments and banks have worked very hard to learn the lessons of the GFC, and banks over that decade have been required to put in place stronger and stronger financial buffers so that should there be another external shock, they were better placed than they were in the GFC to deal with it. So they've come into this with, they're among some of the best capitalised banks in the world, and they've come in with very strong balance sheets. The regulator APRA, very early on in this event, indicated that they would relax the capital requirements on banks so that they could actually open up those buffers to assist the economy and to get credit where it was necessary. So the buffers have been built up for days like this, and that's what they're being used for. Obviously, at some point when it's all over, they'll have to rebuild those. But right now, as the head of APRA says, this is exactly why we build these buffers into the framework of the prudential framework of banks. So banks can help in a number of ways. Collectively across the industry, there has been an agreement to defer mortgage payments for up to 6 months. And those people who do defer their mortgage payments, it will not impact their credit record. So the monthly report to the credit agencies will record exactly the same as if the mortgage was being paid. This mortgage deferral relates to households, to owner-occupied and to investor mortgages. And obviously many small businesses have their business in some way or another enmeshed with their mortgages. So it applies to small business operators as well. They've also agreed to defer business loan repayments for up to 6 months and to provide credit to bridge people's cash flow needs. And I'll go into each of those more detail. So banks will defer loan repayments, as I said, on business loans and mortgages for small and medium business, and I'll define those in a moment. They're also offering loans, including working overdrafts for working capital to get businesses who are confident. They were good, strong, thriving businesses before this, and once the restrictions are over, they're confident they'll be back in that position. So obviously that's taking on more debt, and that's got to be a decision for the business. But there are particularly, I think, very attractive loan packages on offer. Those loans can also be used to bridge the gap until the first JobKeeper payments come through. So some businesses who are who are clearly within the eligibility rules for JobKeeper, but need that cash flow to get them between now and when the government's platform will be up and running, would also be eligible to access a very short-term loan if they needed to keep paying workers and keep them on board. So which businesses are eligible? Small and medium businesses, including sole traders, who have loans of up to $10 million. So generally within banks, they define their small business book as loans up to $3 million, and most small businesses are concentrated in the under $1 million category. But in this instance, they've extended it beyond that small business book up to a business that has up to $10 million of lending. The deferral applies to both the principal and the interest payments for those loans. The interest, however, it's this is not free money. This is a pushing of the pause button on the debt and the contractual relationships or requirements to make payments. The interest will be capitalised and paid off over the life of the loan. So there's no nasty surprises at the end of 6 months. There's no balloon payment or bullet payment. It will be up to the customer whether or not they want to deal with this by extending the life of the loan by 6 months, or whether they want, if they're in a position to change their payments so that they can discharge the loan on the original term. Within that group of businesses of loans of up to 10 million are a category of commercial landlords who have premises such as small shopping centres, and predominantly, people who have retail tenants of some kind. In order to access the 6-month deferral, a commercial landlord has to declare that they will not evict tenants or terminate the leases of those tenants on the basis of rent arrears caused by COVID. So certainly understand there might be other reasons in a tenancy relationship why certain actions might need to be taken, but where the small business has been COVID affected, essentially what banks are saying is, if banks do the right thing by the commercial landlord, they expect that the tenant to get some of the benefit from that. So deferring these loan repayments provides relief for 98% of all Australian businesses who have a loan from an Australian bank. Now, there are many businesses, and commercial landlords are in this category. Some of it's not all of them. Some of them are in this category who don't have lending from an Australian bank, and unfortunately, they can't be helped through these packages. They might have private equity, they might have foreign capital, particularly the bigger end of the commercial landlord group. But in terms of all Australian businesses who have a loan from an Australian bank, this deferral covers 98% of them. It only covers 50% by value, which tells you that the other 2% of businesses are really the big end of town. And that's not to say that they won't be helped. That 2% who have loans over 10 million can also get relief, but it will be done and assessed much more deeply and on a case-by-case basis, largely because the bigger they get, the more complex their funding arrangements are likely to be. I should say also, in relation to commercial landlords with loans of up to 10 million, banks have also agreed that they won't take any enforcement action on what's called non-monetary covenants. So things like if they were parts of the contract often require banks or require the landlord to have a valuation done at a regular period, and if the valuation of the property falls below the amount of the loan, banks have the right to step in. They have agreed that they won't take any enforcement action on those rights within the contract for this period of deferral. So in order to, how do you qualify? You only have to assess, and it's a self-assessment by the customer, that they have been adversely impacted by COVID. So they have to identify that that's the case, and the bank will accept that without further verification. And banks are doing their best to fast track the approval process. I'll acknowledge, before some of you tell me some stories, that that's not as easy as it sounds. Just like the government, just like Centrelink has been totally overwhelmed, you can imagine that bank call centres have also been overwhelmed. They do understand that it's important to get this credit out there as quickly as they can. However, the reality is that for some people, there's going to be a wait at the end of the line. In addition to deferring payments, the government has also issued a small business or a small to medium enterprise loan guarantee scheme. The government is providing a 50% guarantee on new unsecured lending, and that goes across both banks and non-bank lenders. Not every non-bank lender has bought into the scheme. You have to sign up for it, but there are a number of finance institutions, including Australian banks, that are now part of this scheme, and it started officially at the beginning of last week. Some banks were offering any loan made before then, from the 23rd of March when it was announced, will qualify for the guarantee as long as it meets the scheme rules. The fact that the government is guaranteeing 50% of the loan means that banks can afford to offer this at a much lower rate than they normally would for a business loan. Generally, and they're offering it around 4.5%. every bank's different, but around about 50% lower than their current standard rate for a business loan. It also means that banks can take on higher risk borrowers. The government's intention here was to put in place a guarantee that would allow banks to go further up the risk curve than they might otherwise be comfortable with, or than they would otherwise be allowed to do by the prudential regulator. One of the requirements, or one of the conditions of getting the guarantee, is that the bank has to offer the loan on a no repayments for the first 6 months and a maximum of a 3-year term. I should clarify that it doesn't mean that the bank can't, at the end of 3 years, extend the term, but should they choose to do so, the government guarantee will cease. So the loan is guaranteed for the first for a 3-year term. The amount that the government is guaranteeing, they will guarantee $20 billion of lending, which on a 50% basis means that should unlock about $40 billion of lending. The prudential regulator, APRA, has required banks to be very transparent about this, as has the government, and APRA will be collecting data on how this is being used, and the government will be reporting on that. So it's a bit early days yet, but I can't say when the government will make a decision about releasing their first round of data, but I would expect that they'll be keen to hold banks to account and to make sure that this is a taxpayer, underpinned guarantee, and they'll be wanting to make sure that the information about it gets out there. So they're the sort of bigger packages of both credit and deferrals, but there are other ways that banks can help, and I would encourage businesses on the line and people that many very small businesses and sole traders often don't have or want to take on large loans. If they don't have a loan, then they're a business loan, then they're not going to get any benefit from a deferral of payments, and they may not want to take on further debt. But they can do other things such as waive fees and charges. Many very small operators often use their credit card. They can talk to them about interest-free periods. They can talk to them and work with them on debt consolidation to make repayments more manageable. And as I said earlier, where commercial landlords get loan relief, they'll need to pass some of that benefit, even if it's just the security of not being evicted, onto their tenants. So we hope that that gives protection for a range of small businesses for whom rent will be one of their very significant outgoings. And I suppose the last message I want to leave is, what banks tell me all the time is that the sooner people talk to them about being in trouble, the more likely it is that they'll be able to help. I think it's a very human thing to be slightly reticent about talking to your bank if you feel like you're in financial difficulty. And banks will often say that, unfortunately, by the time people come to them, they're already in so much trouble. It's very difficult for any of these things to make a difference. So, anything that you can do to encourage people if they're worried, even if they're not in financial difficulty yet, but looking forward over the next 3 to 6 months, they're worried about what it might mean if the current restrictions limit demand for their services, then now's a good time to be at least talking to their bank. So I'm going to leave it there and come back to you. And Martin, open it up for questions.
Got one here from one of our board members. Tourism education have been hit hard. Are the banks generally seeking to support in unprecedented times, or will there be foreclosures at some point? Is there a tipping point?
One of the reasons that the government identified a 6-month scenario, and banks very much took their lead from the government on that, was a view at the time that we could well be in these sorts of restrictions well into July, at the end of July. And if that was the case, then we would then have another 2 months as restrictions were lifted to get a sense of how that was playing out sector by sector. I think it's still early days, but touch wood, while the government is being, I think, rightly cautious, I think they've already indicated, well, they lifted some of the restrictions on elective surgery yesterday, and they've already indicated that they are looking potentially at some of the other measures being lifted by the end of May. So that if that happened, that would give us an even longer period in that 6-month window to get a sense of where businesses are, how they're getting back on their feet, if they're getting back on their feet. I should say one of the reasons that banks can make these, one of the reasons banks have been able to make a commitment to these deferrals on an almost automatic basis has been because the regulator, normally once a loan is in arrears, the bank is required to hold more capital against it. The regulator has said for these deferrals, they do not have to be treated as arrears, and therefore you don't have to hold extra capital against them, because that would have made it, almost impossible. Just to give you one statistic, I mean, at the end of last Friday, banks had received more than 500,000 applications that they'd processed, either processed or approved 500,000 applications for deferrals of either mortgages or small business loans. Most of those, not surprisingly, were mortgages. I think about 390,000. But that tells you we're talking 500,000 Australians. That's an unprecedented impact on a loan book for a bank. And, they've gone into this hand in hand with the regulator, and they'll come out of it hand in hand. If we need to extend beyond the 6 months, how comfortable is the regulator in giving that extension? Banks also felt very strongly that they didn't want to pick sort of winners and losers in this. They decided to do it by where could we draw a line in our loan book and know that we could afford to give, very high numbers of deferrals, as opposed to saying, we're going to give a much bigger degree of assistance to this sector or that sector, because it's so hard at the moment, and particularly when they made these decisions 3 weeks ago, to really identify which sectors are going to be, we've seen knock-on effects in sectors that I don't think people anticipated. So right now they're sector agnostic, but I can see a scenario, Martin, where coming out of it, some sectors may need support for longer than others. And it's a question we're turning our minds to with the regulator. Do we do that sector by sector? Do we do it business by business? What are the parameters whereby banks could extend? But I think it's also fair to say that, a lot of lessons were learnt during and post the GFC about businesses, the relationship between banks and businesses who were suffering, and how you get them back on their feet. So I think you'll see, all those lessons being put to play in those decisions.
And so a pointed closing remark there, because again, another question that's popped up is, and I think you've answered it, can we use these current times, the grey skies, as an opportunity for banks to rebuild their relationships with customers post the wake of the Commission?
Well, I think one of the recurring themes of the Royal Commission was, the ongoing question of whether banks had met community expectations. And the very clear view of the Commission and the evidence that they brought forward was that in too many cases, banks, they may, in some cases they didn't comply with the law, but in others they might have complied with the law, but they failed to meet community expectations. Banks hold a very privileged position. They are the caretakers of other people's money. And with that comes a very high degree of responsibility and expectation. And I think if you look at what banks have done in the last 4 weeks, it's pretty clear evidence that they've learnt some of those lessons. They've listened to the conclusions of the Royal Commission. And the question they've asked themselves from week 1 of this was, what would the community expect of us? I mean, at the same time, they've got to be prudent and cautious, because the money they're putting out here is money that sits in your deposit. So on the one hand, they've got to protect the interests of their depositors, and on the other, make sure that they are taking a sufficiently flexible approach to allow or to help the economy bridge this.
Thank you. Here we go. Nice holistic one here. General leadership question. What is the most important thing business leaders should be doing now? And And then another follow-up question: do the banks have budgets to offer deferrals longer than 6 months? I think we've answered that. So the question is, what is the most important thing business leaders should be doing there from your perspective?
Excuse me. I just got a dry throat now from talking too much. Hang on. I'm not sure that I would single out one single action. I think firstly they should be doing everything they can to protect the safety and the health of their employees and of their customers. And I think in thinking about the safety of their employees, there's all the very obvious ones like hand sanitizer and face masks where appropriate, etc. But I think many of you will also have people who have been working from home for 4 or 5 weeks now. And this is an entirely new experience. And I think being very mindful of your team and their isolation is going to be critical to their mental health. So using, this kind of technology to keep people as connected as they can, firstly to you as their employer, because that's going to be critical to getting the economy back and up and running. But secondly, connected to each other and to the rest of the team, because, I do think there's going to be some people who are finding this much, much more difficult than others. So I think that constantly reaching out to your teams and bringing them together, finding reasons, not only for work meetings, but, my team and I have a Friday night socials. We use a Zoom and everybody has a drink at 5 o'clock and, you just check in on how they're all going. And I think that's very important. But I also think that at times like this, I always live by the motto, you never waste a crisis. You never wish one to come upon you. But if you have it, what are the things that you are able to accelerate? And where does it give you an opportunity to innovate in ways that will enhance the ability of the business to come out of it at the end, or the organisation? So if you'll be finding that people have found a whole range of new ways to work. How do you take that and turn that into, that something that will turbocharge the business and the economy post the crisis? And you're going to need your people to do that. So I think, one of the first responsibilities of leaders is to look after their people, because you're leading those people. But to look, every crisis has within it the seeds of opportunity. And I think we've got to the point now where probably people, I wouldn't say things are stabilising, but I think for the first 2 to 3 weeks, it just felt catastrophic and people were running around trying to just catch all the balls in the air. If we are in this circumstance for another 3 or 4 weeks, I think now's the time to pivot, if you haven't already done it, and say, where are the opportunities for us here?
Absolutely. No, good words. It's certainly a time to be, people are the new commodity, and certainly they prove to be the most valuable. Jumping back a bit to the nuts and bolts, Tanvi has asked, what is the expected impact of these relief measures on banks' profitability?
Well, we will see bank half-year results for ANZ, NAB and Westpac in the next 2 to 3 weeks. So it will, the next 2.5 weeks, we'll see some of that, and they'll be reporting on the half year, not all of which was impacted by COVID and these packages. But I would expect that they will also be giving some guidance to the market about how they think this will play out, particularly in the first quarter of the next financial year. I don't think there's any doubt that there will be an impact on banks and on their bottom line. The regulators have already made very clear and very publicly they are working and supervising these packages very, very closely. And they're literally sitting down with banks, large and small, regularly looking at their loan books, looking at where where they're exposed to particularly difficult sectors, etc. But regulators have made it clear that they are very, very confident that the capital buffers that banks have that mean that they are very well equipped to take this kind of 6-month hit to revenue. You may also have seen the regulator has come out and advised banks and other financial institutions, insurance and others, to think very, very carefully about dividend payouts in this period. that they should be considering. They should be stress testing. They should be making very careful forecasts and stress testing those forecasts when they consider making dividend payments. So I'm not privy, and nor should I be, to what the decisions of the bank boards will be, but I don't think the regulator makes those comments lightly, and I don't think boards take them lightly.
Okay, perhaps maybe the last question, I'm just conscious of time. Anything the banks need from us and from government going forward as a chamber and a business community, I guess?
Yeah. Well, I think I'd say a couple of things. Firstly, I think the whole economy, whether it's government or banks, I think actually the Australian economy needs organisations like chambers of commerce to play a leadership role in local, in their regions. And I think you're a very active chamber. You're very well placed, firstly to be leading the local debate about, where the economy is going, what it needs, and how it, and appealing to the community to support the local economy. But I also think you've got an obligation to make sure that all your members are very aware of all of the assistance that is available. There are many countries around the world trying to deal with this that do not have the safety net that Australia has, and nor does it have what I think you're seeing is a very joined up approach between government and the corporate sector. So, whether it's banks or other large corporations, we're not taking any steps without being in lockstep with the government. If you put the mortgage deferrals with the job seeker and the job keeper initiatives, you see those two things working together to really take the biggest expense off the household and give them an income during the time that they might be facing unemployment. So I think it would be a terrible shame if we get to the end of this and you've got businesses falling over because they didn't know about any of these initiatives. And I'm sure you're playing a role in that already, but I can't stress enough. I've done quite a lot of radio and talk back, and even though these packages have been out there now for sort of 3 weeks, people are still ringing up and don't know about them. So, people whose businesses have been facing catastrophic circumstances, hardly surprising that they may not have put their head up for air.
Sure.
And they're, just doing everything they can to keep their people and their lease and everything else together. So everything you can do to get, the information out there, I think is a really important leadership role for the chamber. And every region will have its own particular issues to deal with. But there's, as I said, there'll also be opportunities. I don't have, government is yet to make any decisions about the exit strategy. They've made some, but they don't. There's still a lot of question marks about how we will come out of this. But as I'm sure you're aware, there's a lot of discussion about the likelihood that the domestic economy might be sort of unlocked more rapidly than the national borders. And if we do see ongoing restrictions on international travel, which this is me speculating, but if that's the case, which would frankly make a lot of sense, given that's where a lot of our cases came from, then there is an enormous opportunity for the Gold Coast to capitalise on domestic travel. A lot of people, because of this, have already missed holidays. They've missed Easter. They've missed school holidays. At some point, they're going to want to go away and have a break. And there are a few places better placed than the Gold Coast to capitalise on that and to use that as a way of sort of turbocharging your local economy.
That's a great plug for the Gold Coast, and also a great one for the chamber. And we do advocate for businesses, so it's good to have more endorsement. I'll probably wrap up now. We do have more of these webinars. We've got Megan Scanlon, the state member for Gavin, next Friday, followed by the federal member Angie Bell the following Friday, and we have next Wednesday webinar for against financial